What's up, everyone? We are once again live at Hong Kong FinTech Week 2022. I'm Jason from HashKey, and with me today is Lesia, Head of Investor Relations at JKL Group. Well, welcome to Hong Kong FinTech Week, Lesia. How are you?
Thank you. Very well. How are you?
I'm doing good. So how's your experience at FinTech Week so far?
So it's just started. I'm lucky to be here on the first day, but already I can tell the panel discussions are really finance oriented, and what I really value is that every panel discussion, every speaker at the event is trying to find some collaboration points between traditional finance and blockchain and crypto industry. So it's not really only fintech in traditional way of thinking. It's also trying to put fintech on blockchain, which is really incredible to hear. Also comparing to previous fintech conferences here in Hong Kong of the past years, which were much more traditional finance and fintech oriented as opposed to blockchain oriented.
Now, based on what you've mentioned, I assume this isn't the first time that you're here at Hong Kong FinTech Week, right? How many times have you been here before?
I have been to the previous Hong Kong FinTech Week, which has been 2021, which was already switching to crypto. So that was, back then, it was quite a surprise to see a lot of crypto businesses and blockchain-based technology being implemented by fintech companies. But I did hear last week that previous conferences were much more traditional finance and way less blockchain space.
Now, as you mentioned just now, Lesia, one of the largest motifs and themes this year in FinTech Week is digital assets and blockchain, right? Now, can I ask you, what role do you think digital assets and blockchain will play in the future of capital markets as well as the global financial economy?
Thank you for the question. That's a really good question here. And I think that's a question we're all asking ourselves here. And this is the question every speaker gets to elaborate on. At the moment, what we see is blockchain is developing in a completely decentralized manner, meaning that it's the creativity of the space is unlimited. We are still trying to find a balance where blockchain technology fits traditional finance. Traditional finance is very well-established institution with strict regulatory mechanisms, with a strict framework of operating framework, and the structure that it's run by. At the same time, blockchain is way more creative, like I said before. So the space for collaboration here is unlimited. What we're trying to identify now is what is the best balance between blockchain technology and traditional finance. Speaking of blockchain technology, decentralization is the first thing that comes to mind. Some clients are very comfortable with decentralization. Some clients prefer more centralized to store their digital assets in a more centralized manner. So there will be always there's infinite ways to find collaboration here. I think right now the whole industry is trying to identify which parts of blockchain make sense to be adopted by fintech, by traditional finance, and which parts of blockchain should remain purely on digital assets, crypto side.
Now, going off on your last point, Lesia, then can you answer your own question in terms of in what area do you think blockchain will play a part in finance?
So for me personally, I believe the number one problem or challenge that blockchain solves in traditional finance space is ownership of assets. At the moment, especially in the interbank markets, there is a big question of who owns the assets. Netting platforms play a large role in traditional finance. But when we talk about netting, it does not necessarily mean that the institution that holds assets on their balance sheet physically holds the asset, and obviously that creates some counterparty risks. What blockchain can solve, that's just top of mind, is these interbank payments or like repo agreements. So those very high, relatively higher frequency transactions where ownership creates some part of counterparty risk. Blockchain technologies are instantaneous, global, and with using blockchain, you can actually transact and transfer assets globally pretty much instantaneously. So I think that is the ownership is the first big problem in traditional finance that blockchain can provide a solution to. On the other hand side, you have decentralized custody, you have decentralized ownership. You can provide users with their own keys to their own assets, whereby users would not have to rely on a centralized party for storage of their assets. I think those 2 points are like the primary focus of the industry right now.
It's interesting that you mentioned the increasing hash rate, because Bitcoin mining difficulty has been recording new highs. And so the demand is obviously there, despite the price of Bitcoin not being in its peak last year. So I guess that is just a testament to how solid the Bitcoin mining community / technology is, right?
I think on the one hand side, of course, it's a testament to people, miners, new miners coming into the market, new miners plugging in their machines, securing the network. The more machines there is plugged into the system, the more secure the network is. And to be honest, proof of work mining is not solving complex algorithms by far. It's about securing the network. So the more miners, the higher the hash rate, the more secure and impenetrable the underlying blockchain is. The reason, of course, the second point, on the other hand side, the reason so many miners are plugging in is because economically it is still highly profitable to mine Bitcoin. When I say highly profitable, it's there's different bases for comparison, right? So if you compare it with how profitable it was to mine Bitcoin at all-time high at 60K, for sure it's way less profitable now. But if you compare it to any like traditional, stable, let's say technology business, it still economically is profitable to mine Bitcoin. So, for example, if you pay around 7 cents for 7 cents per kilowatt hour electricity price, and you mine with the latest generation mining machines, S19Js Pros, the cost to mine 1 BTC would be under 15K. So at 20K, it is still profitable to mine Bitcoin. The reason so many miners are choosing now as the moment to enter Bitcoin mining is because mining machines are at the all-time low. Basically, right now we are at the low point of the previous bear market, which is incredible. Just earlier this year, the price of machines has been over $100 per T. Right now, for an average machine, the pricing is around $18 per T. So if you enter into Bitcoin mining now, one, your capex is way lower than it used to be even earlier this year, and you still have an economic profit out of your operation.
Now, my final question of the day is, what is the first thing that comes to your mind when I ask you what is the most memorable moment of crypto for you over the past 5 years? The first thing that comes to your mind, Lesia.
I mean, when I entered crypto, which was a very low point. And
when was that?
I mean, not low point in price, low point for me personally, because that was at the very peak of 2017. In December 2017, I entered at 18K, enjoyed the rally up to probably around 19K before it all crashed down to sub 3 levels. So I did go through the bull market and bear market. I'm very happy that I held on to BTC, and I guess the best advice I ever heard about Bitcoin is don't buy it until you do at least 100 hours of research. If you do not do that, you will never survive the bear market. You will just be the paper hand selling at the worst point and entering the best at the worst point, same as I did back in 2017. I entered at the point where I shouldn't have, because the reason I entered was because everyone was talking. And the number one rule in crypto for retail traders that have been around is if your barber or taxi driver is talking about BTC, that's the moment you should sell, not buy. I belonged, unfortunately, to the second category. I think that was my inauguration in the space.
It's interesting that you mentioned research, and obviously, guys, do your own research before going to the space. That's for sure. Or what secondary sources do you recommend in terms of doing their own research on the entire crypto ecosystem, or let's say Bitcoin?
The way I first found out about Bitcoin, I mean, substantial knowledge, not just some ephemeral idea of blocks being put together in a blockchain as transactions happen. It was through podcasts. It was a Preston Pish podcast. Actually, it was TIP, I think, the investor podcast, interviewing Preston Pish. They have a 2-series podcast where within 2 episodes, he explains all the fundamental theories you need to know about BTC. So we're talking about the Metcalfe's law, the network effect. We're talking about the stock-to-flow model. And the reason I found it valuable is because coming from traditional finance background with a purely financial education, I found it really interesting how Preston was evaluating and was trying to and succeeding in evaluating, finding methods and finding theories to evaluate Bitcoin in a traditional way. So comparing it to traditional assets, which is very quite difficult to do given the essence of the space and the essence of this asset. So for me, I think number one question was, how is it possible to evaluate crypto? Because when you look at it at the first sight, it seems like it's purely retail driven hype. But then when you look deeper into it, you know that you find comparison to gold. There is a limited supply, it's a store of value, hence there is the stock to flow model that is used to evaluate gold that actually is applicable to BTC. There is the network effect. So Bitcoin is, you can call it as a network, and each subsequent user adds value, it adds an immense value, a quantifiable value to the project. So in this way, you can compare BTC to a social network, right? So like any platform that has network effect creating value. So I think in the end, there's multiple frameworks that all combined work to identify and evaluate the underlying value of the blockchain. I think that answered the first question for me. And then afterwards, it was learning about all the other cryptocurrencies in the space, getting into the degen space of DAOs. I mean, I don't want to name the projects.
Yeah, let's not name names here. Yeah. Lesia, thank you so much. It was a pleasure to speak to you today. Likewise. So have fun, guys, at FinTech Week, and we'll catch you up soon.
Thank you.